Palantir is just getting started. Ooh, what a statement to make right now, right? Palantir just under $28, $62 billion in market cap. Stock is up over 60% year to date, 22.5% in the last 12 months. In the last month, it's up 17%. What a statement to make, right? It's only getting started with an 82.6 time forward PE. Well, let me explain. As I've said previously, stock does not equal the business. Business does not equal the stock. Yes, I understand that Palantir today is very, very expensive, especially if you only think that this company will increase its sales by 20% on average for the coming years. Yes, that is quite low for a company that is trading at a high premium. Even if we look at the EPS is expected to grow 32% this year, but then only 19 and 18% in the coming 2 fiscal years. To me, that's quite low. Again, these are analyst estimates. These can change, and these have changed, as you can see right here. Back in 2022, sales for this fiscal year were much closer to $4 billion. Now, $2.7 billion, which is a bit higher than the higher end of the Palantir guidance for fiscal year 2024. Same here for fiscal year 25 and 2026. In my opinion, the expectations are quite low. But then again, it's up to Palantir to continue to execute. It's great to have all those partnership announcements. It's great to talk about Palantir and all of that. But if we're not seeing continued reacceleration in growth over 20%, maybe even closer to 30%, then I don't think it should be valued at $62 billion. That said, I have no intentions to sell my shares right now. If we go back lower, so be it. As long as the business continues to execute, that's the most important part. Now, going back to the big title statement, just getting started, let me explain in a couple of segments throughout this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we'd really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's first start with a quick recap of what we should expect in Q2 and maybe another raise in full year guidance. So for Q2, they expect revenue to come in between $649 and $653 million, adjusted income from operations between $209 and $213 million. For the full year 2022, they raised their revenue guidance to between $2.67 and $2.689 billion, which again is around 20-21% year-over-year growth. They've also raised their US commercial revenue guidance to in excess of $661 million, representing a growth rate of at least 45%. So hopefully we get another raise in the upcoming quarter. Moving on to what Alex Karp said in his letter, other companies engage in intricate and elaborate efforts to sell and market their offerings. Their resources are focused on marketing at the expense of actually constructing the software and building the systems that they hope to sell. We have taken a different approach and are now investing even more heavily in simply letting potential partners use our software in order to decide what works and what does not for themselves. They need results now, and we believe that we have the only platform that works. Why did I highlight this last part here? Well, because a lot of companies are investing heavily in AI, whatever, AI infrastructure, AI products, AI services, you name it. But, as you will see in just a second, not all of them will succeed. Not all of them will have a high return on investment. Continuing here, our intentions is to make our AIP the most dominant infrastructure in the market and power the effective deployment of artificial intelligence and large language models across institutions. To that end, we are working to make AIP available to an even broader range of organizations in the market that we serve, including businesses across the United States and abroad, state and local government entities, as well as research scientists and academic institutions. By the way, the more Palantir will grow, big or small clients get attracted, do not expect to see every single partnership or contract announced on their website. Just like you're not seeing every announcement on other companies' website, it just won't make much sense. That's why it will be important to look at what they report each and every quarter. And so let's talk a little bit about generative AI and the investments in every single industry. So I wrote down here a couple of things summarized by Yes, an AI. Woohoo! Anyways, generative AI investment is surging. So 2 points here. Nearly all 97% business leaders surveyed by KPMG plan to invest in generative AI within the next year. 43% of those leaders plan to invest $100 million or more. Now, how do you measure ROI or return on investment for generative AI? Businesses track generative AI's return on investment in various ways. 51% measure productivity gains, 48% track employee satisfaction, and 47% monitor revenue generated by AI chatbots. And so, businesses are investing in data security, governance frameworks, and workforce preparedness to mitigate generative AI risk. Now, there are high payoff generative AI applications. They deliver a significant leap in a company's core process, revenue productivity, attract new customers and retain existing ones, and are difficult for competitors to replicate. There was an example that I found with regards to Bullhorn's AI-powered candidate job matching. So they analyzed successful placement to create a matching model, increases recruiter revenue and profitability, 25 to 35% placement rate, 30% redeployment rate, and 68% productivity increase. And the last one here, difficult to replicate because the model is based on Bullhorn's specific data, millions of placements. Of course, we know that the most important part here is going to be the company's data, very unique data. Of course, not all generative AI applications are high payoff. Some applications like Bullhorn's AI Copilot for drafting communications are becoming commoditized, offered by many and not a revenue source, as we've seen with many companies. Companies should ensure their generative AI applications provide value and a positive customer experience. According to Gartner, generative AI promises unprecedented productivity improvements and business transformation opportunities, but calculating the value of new investments in generative AI requires you to build a business case by simulating potential cost and value realization across a range of generative AI activities. These typically include quick wins, differentiating use cases, and transformational initiatives. McKinsey & Company said generative AI is poised to unleash the next wave of productivity, emphasizing the economic potential of its overarching impact on productivity. Their latest research estimates that generative AI could add the equivalent of $2.6 to $4.4 trillion annually. This would increase the impact of all artificial intelligence by 15 to 40%. But the question, to build or not to build? According to Gartner research, by the year 2028, more than 50% of enterprises that have built AI models from scratch will abandon their efforts due to cost, complexity, and technical debt in their deployments. And I don't even think that's so far-fetched. I think a lot of companies today are spending a lot of money on promises, on false promises, on just AI stuff so that they can mention it in the earnings report, so that their investors will be happy that they're not sleeping on the AI waves. But in reality, do they actually need everything that they're buying? Probably not. And so now I want to touch on what Chad posted on X. Chad works for Palantir. If you're ever on the Palantir's developer YouTube page, you probably know who he is. Anyways, he said, I had an introductory call with a over $100 billion business yesterday. During the conversation, I was asked, so who are your competitors? Snowflake, Databricks, Fabric, OneLake, BigQuery? He replied, yes and no. Those are just one, maybe two blocks on our architecture diagram. Yes, you need to get your data into unified space, but that's like one small step. He then proceeded to give them a demo of Palantir AIP, Foundry, by the way, had to find out what this means, but this is the Chief AI Officer. Everybody gets a title these days. So you are more like a whole cloud. How are you different from the cloud providers? To which he answered, we have a fully integrated toolchain that works seamlessly together, a tool factory. With cloud providers, you still have to stitch things together, and security models vary. The only thing you get is a single bill, not a single ecosystem. The same problems exist with buying a slew of SaaS systems minus the single bill. You end up spending so much time dealing with the frictions of tools, even within a single cloud provider, instead of adding value. Their response was, yeah, no one tells you how fragmented these cloud providers' tools are within their own cloud. It's such a huge misconception and a hard truth most people don't know. We spend so much time and resources doing this instead of adding value. Now, the thing here is that this is just one case. I'm sure that if Chad had the time or the option to talk with 1,000 of those businesses, I think you will hear more and more of the same comments. Chad then replied, I know it sounds like black magic, but our connected toolchain has a single secure model that works natively across the entire suite of over 50 applications in the platform. The focus is on building valuable things, not IT integrations within a single cloud. Let us show you in a Palantir bootcamp how real it is. By the way, Palantir does work with every single cloud provider. This conversation mirrors many stories Chad hears from IT practitioners who are tired of the disconnected and fragmented tool chains provided by cloud providers. The non-differentiated heavy lifting they were supposed to remove often just got moved from the data center to their cloud with a nice markup. Which makes sense, right? Why come out with a new, better solution that will cannibalize your other products and services that are making you a lot of money? We've talked about plenty of companies that suddenly came out with a better product, but it cannibalized other products and so the stock went down. They were earning a little bit less money. Paycom, for example, right? They came out with Betty. Betty cannibalized one aspect of their business. Of course, took a hit, stock took a hit, analysts weren't happy. But in the long term, it is a good thing. If only more companies were doing what is better for the clients rather than how can we monetize, how can we squeeze more money out of a client without actually solving any problems. That would be ideal. Anyways, moving here to one of the last topics here, Raj was asking why others can't replicate or copy the ontology. Here's his understanding after using Foundry and attending Build Camp. Ontology is powered by multiple databases. To replicate something like this, one must integrate features from GraphQL, REST, graph databases, vector databases, spatial databases, relational and non-relational databases to work together harmlessly. To which Chad answered here, I think it also should be looked at, is anyone actually trying? They have different incentives to sell their niche widget. Palantir has spent 20 years building the ontology, learning the hard questions that you cannot skip over, especially in the edge cases that you can only test on the front line of the enterprise and battlefield. Those edge cases are the difference between a robust system and a nice point solution. If you need more explanation about ontology or OSDK, I made a full video about that. That will be in the top right corner. But to finally answer the title, or explain the title, shall I say, Palantir is just getting started. If you have not learned anything from this video, it's that a lot of companies are still spending quite a lot of money on what they think is the solution, but actually is just another product that a certain company, a certain SaaS company is trying to upsell and make money. There will come a time, maybe it's already now, maybe it's next quarter, maybe it's the next year, there will come a time where plenty of these companies have spent millions, hundreds of millions, maybe billions of dollars on products, services, infrastructure, because it is AI, but they're not seeing the results. They're not seeing the right return on investment. And when that happens, well, they will turn to someone like Palantir, where Palantir has shown with countless of bootcamps, with countless of partnerships, their clients showing the positive results. They will come to Palantir and say, look, apparently you guys know how to make us more successful. This is what I mean by Palantir is just getting started. A company with a $60 billion in market cap, only generating close to $3 billion in sales a year is not enough. It is actually nothing. A very, very tiny fraction of the total addressable market. Palantir is now, in my opinion, accelerating its growth, accelerating its sales effort. We know we've been talking about Palantir for quite a while. I've always said that Palantir, with regards to sales, they need to be more aggressive. They need to actually go and get those bigger, but also smaller clients. Hopefully that's what they are doing right now. And so to conclude, those are my thoughts. That's what I think about Palantir right now. It is very expensive. Hopefully we are seeing some good results in the coming weeks for the earnings report. The stock right now has had a great run up. It went out of that little wedge here. Great. 200-day moving average sits just under $21. So if it's a weak quarter, if they're not raising guidance, if the market is not happy because the stock is trading at a premium right now, then look out for that 200-day moving average. RSI for the weekly is actually not overbought just yet. So Do with that information what you want. Do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.